Welcome back to the podcast. It's the Building Your Life podcast. My name is Doug Sandler. I'm hosting along with John Browning. He is the true boss on this podcast. John Browning, welcome back to the show.
All right, good to be here. I'm excited to talk about this topic today because obviously, as a financial advisor, wealth manager, I get this all the time. Why not just do it myself? And some people should.
Apps, and more apps. I can't tell you how many of those DIY sites have apps and that are on my phone. And I'm looking at one right now. I don't want to name any names because I know we're going to talk good, positive, bad, negative things about those apps that are out there. But man, it is tempting to be able to do all this stuff on your own, John. No commissions paid. I can make any decisions that I want. Nobody's looking over my shoulder to tell me, this was not a good decision. You don't want to do that. And it's inexpensive. It's only $10 here, $50 there. All of the reasons why people probably get into it. And of course, I could do it better than anybody anyway, because I'm going to watch over my own money. All reasons why people love those DIY apps on their phone. So let's talk about it. What you say what about the apps to begin with, and then I want to ask a whole bunch of questions from my curiosity perspective because I know you know more than I do.
I mean, there's more apps than we could possibly name, and even if we did, we'd miss some, right? Because it's been all the rage, especially when the market was screaming higher.
Yeah.
It was a little less out there in the media when we had basically almost 24 months of a bear market. So suddenly that wasn't as much fun. So I mean, I can jump right into it. I mean,
yeah,
we can name a few, right? I mean, the people already know if you want to, you can go open up an E-Trade, Schwab, Robinhood, Fidelity account on your own pretty quickly. I mean, 15 minutes, 20 minutes, maybe you'll have your account set up and ready to go online, never have to talk to anybody, right?
Yep.
And they even have tools on there about, how to select stocks and lots of articles you could read if you're so inclined. They work, right? I mean, typically there's no fee for trading now, which is a huge advantage compared to, even 10 years ago,
Right.
When
Right.
that really didn't exist.
Well, the challenge is, and let me go back to something that we talked about last episode, really the psychology of investing. I don't have a system. I do have money in one of the apps, and I do contribute a couple of bucks every month to it. It's kind of like my play money. It's not money that I have with an advisor. It's money that I have just that I'm doing on my own. But the longer that I'm in it, the more that those dollars accumulate. So when I was playing with a couple $100 and it was no big deal, it's now a few $1,000s. Now all of a sudden it's like, oh, this is getting serious now. And I've only been doing it for the last couple of years. So it's not because I have big winners, it's because I contribute a little bit every month. It's kind of like my HSA or my 401k. After a couple of months of it being taken out, I don't even feel it anymore. The
Right.
question, though, is at what point do you either say, that's enough of my portfolio, or do you say, I've got to set a plan in place when something goes up this high, I'm going to sell it. When something goes down this low, I'm going to dump it. I don't have that practice that you have in the game. So maybe just share a little bit about what your belief system is when it comes to these apps for that reason.
Yeah, folks who have listened to me for very long, one of my favorite phrases is portion control. It works in dieting and it works with your investing. So no matter how much you love a particular stock or company, don't allow it to become too large of a percentage of your portfolio, because I don't care what company it is, things can happen.
Yeah.
Big lawsuits happen. Founders pass away, and sometimes the founder was the one. Like, you look at a stock, like, again, not investment advice, not telling you to buy or sell this stock, but you look at a company like Tesla, phenomenal company, right? I mean, it's well built, it's got cash, it's got, it's into AI, it's actually been successful in making money consistently. But maybe the founder goes out and buys Twitter, and whoa, what happened to my portfolio? Or maybe the founder passes away.
Mm-hmm.
And who takes over? What do you think is going to happen to the stock price then? Maybe, who knows what happens, right?
War breaks out, and a country is now occupied where it wasn't before, and they were the largest carrier of or manufacturer of semiconductors. I don't know. I'm just thinking outside the box here. You know.
Yeah, I know exactly what you're talking about there. Yeah, and so great companies, something can always happen to. So portion control is my number one piece of advice for do-it-yourselfers, and being very disciplined about that. Get rid of your FOMO, right? Get rid of your fear of missing out, and be disciplined about that side of it. The all of those apps work, and there's other ones, right? There's other smaller ones. If you're a very, very small investor, there's even apps you can get on your phone that's not even available on your computer. I don't even know the names of some of those, and that can work too. Where I've seen people complain about those is it's very hard to close down an account if you
Mm.
need to do that. And it's very hard to get service if you ever really did need some sort of service. And tax time can be interesting as well if you have some of those smaller ones. But the larger ones, they're going to send you your tax documents. They're going to be there for service. Generally, you may have to wait an hour on the phone, but they'll be there. With an investment advisor, if you got a good one, they're going to be there within a very short period of time if you've got an issue, right?
One of the things that I've seen that I enjoy about it is that, you know, if let's say that you have a stock and the stock is $350 a share, you don't have to buy $350 share. You can buy a portion of a share. So I could spend literally $25 on that particular stock if I chose to. Is that an advantage? Is that a disadvantage? Any opinion on that?
You know, it's a tough one for me. I mean, yes, there is an advantage to it. I think my opinion is that if you're working with that small an amount of money where it matters if it's a six, seven, eight, even $1,000 stock, you really should be looking at exchange traded funds so that you are properly diversified, where you can buy one share and it represents a lot of shares, and maybe
Mm-hmm.
and it's still fun to do that, I think. I mean, because you pick a sector that you really like. Maybe you like innovation, so you pick an ARC fund, or maybe you like the utilities industry, so you pick the utilities ETF. And you can even diversify within the sectors and industries, and that can still be fun. But if you can't buy a full share of something, I would say you should probably be diversifying in a different way.
Okay. Downside to the apps that are out there, aside from the obvious that you don't have a professional standing by your side helping you through, is there anything else that we should be aware of?
I think that's the number one thing. And so then we get into the next topic, right? Which is, what about all these newsletters out there? What about all the YouTube channels out there? It's a YouTube for everything. It's like
Mhm.
there used to be an app for everything. Now there's a YouTube for everything. And I do it too. I needed to put a rear view mirror on my Honda Civic. I looked it up on YouTube and said, "Hey, that's not too bad. I'm gonna do it." So I got that done, and it only took like 10 minutes. It was
Mhm.
really quick and slick. Um, so then the question is, I mean, you have just to rattle off a few. You've got, Paul Mampilli. You've got Luke Lango, Sean Galani. By the way, if you want to talk to me about all these guys, I know who they are. A lot of them I've been on CNBC with, or I've been on a news show with before. None of them are bad guys. I don't think so, anyway. They're great. But here's the trap that you can fall into, and I can as well. That's why whenever I listen to one of them, I'll probably listen to the opposite side of the story every single time, because you'll get pulled in by this story and the emotions behind a particular position that they happen to be excited about.
Mhm.
And they all tend to be either perma bears or perma bulls, one side or the other, right? The world's ending, or everything's going to be great. I think one of them, the whole thing is he starts off his YouTube show with, "We are bullish, optimistic, and positive all the time." Didn't work that well in 2022, but you just have to understand that, and understand that there are emotions involved with listening to all these things. I mean, anything with Banyan Hill, or Agora Financial or Stansberry Research, just understand that they'll sell you the $99 newsletter. They'll have some good information in it, right? Read it, but dig deeper. It's another phrase you'll hear me say a lot. Dig deeper. Because they all have an axe to grind, and they are only selling you the $99 version so that they can sell you the $500 version, and then sell you the $1,000 version, and then sell you the $30,000 version.
Wow.
And they all have their particular bent, and they'll be right sometimes. Broken clocks right twice a day, right?
Twice a day.
And I will say, though, I will say that most of these guys, there's nothing wrong with them. They believe what they're saying, but they focus on one area. And if you are trying to build your best life, it's your life, folks. This is how you're going to survive in retirement. Just consider for a minute, do you want to be building your own house from the foundation up if you've never been in the construction business? So that's what I would say with regard to all those folks out there. They focus on one area, they think it's the greatest, or they think it's the worst if they're the world is ending side of things. And eventually they'll be right. You may be bankrupt before then, but eventually they'll be right.
So you got all the apps that are there that are available to you as you are listening to this. You have the newsletters and information services. Anything else that we should be considering if we're thinking about any of the DIY stuff that's out there?
Pay attention to the service. Are you going to get the service when you need it? I think I already addressed that. Those are the main things. And again, I'm a wealth manager. I'm an investment advisor. I tend to get people after they've done the do-it-yourself model. I also have people who have, like you do, they've got a smaller account that they like to play with. And that's wonderful. I like it because we can razz each other, right? Like, oh, hey, I did this. But most of them realize I picked NVIDIA last week, and it went to the sort of the moon, right? And then what they'll do is they'll actually trim off their profits and send them to me. Because it's like, okay, one, we're going to do it. But that whole lottery mentality, that's why the gambling industry is so big, right? And frankly, especially some of these, they really kind of have a problem with the ones who are like options traders. Because for the average investor, that's just one big casino.
Right.
And you can end up with a problem that's a gambling problem, but it's with the stock market. It's the largest casino available to people. And it can be really tough because you can get outsized gains and frankly outsized losses with options.
That is a good final word. So for those of you that are in our audience and want to get more information about what John and his professional team over at Guardian Rock Wealth can actually do for you, just head over to guardianrockwealth.com. My lips aren't working today. Guardianrockwealth.com. It has never been a tongue twister for me, but for right now it is. If you also want to get a hold of John's book, Build a Life, Not Just a Portfolio, or to connect with John directly, text LIFE to 321-421-5213. Again, visit John's website at guardianrockwealth.com. John, thanks for hanging out with us today. Thanks for sharing your expertise and your wisdom about the DIYers out there.
All right. We'll see you next week.